a conversation.
Yeah.
You know, we're talking to, you know, entrepreneurs and people in business, you know, professional CEOs, even people who have 9-to-5s who, you know, have a story to tell, who are securing their future in their way, who bet on themselves. And we're here. I'm excited. I don't even know the coolest episode, but this is episode whatever it is. And I'm excited. So we're here with my guy Andre, major finance guy, and so that's where we start. So it says introduce yourself.
Oh, thank you. I appreciate the conversation. And my name is Andre Green, also known as Andre Talks Green on all platforms, because I talk about green, which is money, right? And I'm luckily wearing green today, so it all falls in line. But I mean, I'm just a kid from Queens who sort of figured it out at a relatively young age after just hustling from being from New York. So, I mean, on my life journey, right? You know, I'm first generation Jamaican. So my parents...
Shout out to the Yardies.
Yes. One love, always. But, you know, I got really strong work ethic from my parents, right? That's where I started. You know, my parents are Catholic family, born really strong. We used to go to church every Sunday. You know, me, my mom, my dad, my sister grew up in a stable household. And, you know, you learn a lot when you come from a strong foundation. And that was a lesson that I actually ended up learning along the way, right? In all areas of my life, not just family, right? That comes down to your finances, comes down to your relationships with your friends, with your loved ones, with everyone. You gotta have a strong foundation. And when your foundation is strong enough, you can build the highest skyscraper on the planet because you're coming from a solid place. Going back, went to high school, went to college at St. John's University, graduated in 2006, and then started my journey in which by accident got into real estate, right? I was volunteering for a nonprofit and just helping this lady out, trying to figure out my way, finding my path. I didn't know what I was going to do when I graduated college. I thought I was going to be a telecommunications guy. Computer science was really big when I was coming up out of high school. And she, by accident, referred me to a friend who referred me to a friend, ended up in real estate. So doing real estate for probably now going on almost 20 years. But what I learned back then was it's a hustle. Like everything else, you know, we all come from a place where if you want to get ahead, you got to hustle, right? Now, what does that look like for you? Because everyone's hustle is not the same. But I did that for quite some time, and I got into a space where I became a real estate broker after being a loan officer for about 7 years. And I got my license, and I was selling homes, I was doing rentals, I was doing mortgages, I'm doing everything.
Right.
You got to make the money, right? You got to make the money. So I'm doing 100%. Everything. And I became known in my community as the guy that you go to when you're in a jam with a really hard situation, right? So what's a hard situation in real estate? You're going to lose your home, someone passed away in the family, you don't know what to do with the house, or we got to sell it in a rush. Those type of things, I got the phone calls for. And what happened to me on 3 different occasions in 1 year was that I was going to meet with families, very similar situation, just like this. We sit on a couch, we're talking, trying to figure out, you know, how do we keep the house? Do we have to sell the house? Because I'm the realtor walking in the room and I'm telling them, don't sell it. Because I know what happens when we sell real estate. We give away the legacy, the assets, the wealth. You literally sell it out the door. So I'm telling these families, don't sell it, right? We can't keep it. And at surface, I could have just took a commission check, didn't think about it, and just kept it moving. And I sat down one day, I'm like, why are they selling? And then I realized that no one's giving them a solid foundation. They don't know what to do with the money when they get the money. All we're told when we grow up, go to school, get a job, buy a house, have a family, right? But what happens when you get the house, your grandparents got the house, now your parents have the house? It doesn't always pass down to the next generation because no one's talking about any of the other things that come along with the money. You got to maintain the house. You got to fix the boiler. You got to fix the roof. Things happen. Life happens, right? Some people lose their job. We've all experienced COVID, right? So a lot of us stop working for a period of time. But if you got a big bill and you're not working anymore, what are you going to do? So I realized that there was a piece of the puzzle missing for a lot of my community. That came down to insurance, right? And financial literacy, financial education. So I went and got licensed. And then I started talking to anyone that would listen. I'm talking to you about life insurance. It's still an uphill battle, but I'm hoping that these conversations start to spread the word that it's not just a thing you use when you're going to die to leave to your kids or your grandkids or your aunts and your uncles, right? You can use the money while you're alive. You can save your assets. You can build your wealth. You can protect your family, and you can live off the money while you're alive. So why not?
So let me ask you this question, and that's an amazing story.
Appreciate
but
it.
I like to ask my guests this kind of before we get into the deep, deep waters of what we're talking about. Mm-hmm. You know, if you can go back 10 years from now, from this exact 10 years ago, and you can tell yourself anything based off of the knowledge you know today, or the knowledge that you've acquired, what would that be?
Start sooner.
Okay.
Start sooner.
And start what specifically?
Everything. Start everything sooner. There's one thing that what do you think is your most valuable resource?
My most valuable resource?
Yeah.
Probably time.
Yeah. That's my vote. That's everyone's most valuable resource. That's the one thing, no matter what you do, you can't get it back.
And it's crazy. I was in the gym. I play basketball every now and then. I'm a retired glorified fitness Hall of Famer.
We was all there.
So when we're playing basketball, it's crazy because, I'm in my late 20s, and you got these like 22-year-olds, 23-year-olds, 19-year-olds that like play a game and leave, or they don't show up in the morning when we play. And I'm like, man, the things that I would do to like, although we have this knowledge now, but based on what I know now, the things that I would do to go back to that time in your position, I wish I had a time machine.
Yeah.
And I think that's very important that you said that, because time is very valuable.
Absolutely.
So let's go back to the beginning of your journey. What got you on the path of this business entrepreneurship that eventually led you here? What was that thing, that moment?
That's a great question. I never wanted to be an entrepreneur. I was the guy that had a 9-to-5. I had a really good 9-to-5. And I'm like, I don't want to quit my job. I just want to make more money. So what kind of side hustles can I do to make more money? And to be frank, I was fired in 2020.
Oh, wow.
Right? That's what put me out the door completely. But I mean, I've always been raised. Like I said, my family's like, you get a job and you work, and that's all you got to do. So I got my license. I got licensed in a bunch of things. I got multiple licenses. And I would go to work 9-to-5, and then after work, I would work on my stuff from 5 to 9, right? That was my daily grind every single day. So, when I got an extra check, I'm putting money away, I'm investing into other things, I'm paying off debt. Like, I never really saw myself leaving the rat race. I would just keep working, and then I'd have a bunch of money, so I'm gonna take some really nice vacations. I'm gonna go to really good dinners, but I'm not stressed about money. I have a budget, I figured out where my money's supposed to be, and everything else is just gravy.
Do you believe that everybody should be an entrepreneur or explore the entrepreneur realm?
100% no. Everyone's not an entrepreneur. It takes a certain level of grit, a certain level of determination, a certain mindset. There's a lot of adversity when you become an entrepreneur, right? And there's things that no book, no classroom, no one can prepare you for. It's almost like being a parent.
Right.
I have a son who's turning 18 this summer.
Congrats.
Thank you. He's going to college. He already got admitted to college, so he'll be going off to school. And there's nothing that anyone could have told me. I had my son when I was 22.
Right.
Nothing anybody could have told me could have prepared me for being a father. I don't care how many conversations we have, how many books, how many classes we're going to go to. I don't know what it's like until I see him. The first time I held him, I'm like, my whole life has changed. I got a whole person I'm responsible for. Now what do I do? That is the closest thing I compare entrepreneurship to, because the business is your baby. And if you don't do the proper things at the proper time, your baby's not going to make it.
So let me ask you this question, because I went to college. I
Congrats.
I went for free. I went to school. People ask me what I went to school for. I don't tell them I went to school. I went to school for basketball.
What do you mean you went to school for basketball?
I went to school on a scholarship to go play basketball.
Okay.
I just had to go to class to go do what I do.
Okay.
And you say your son goes, so I have a different outlook on college. For certain things, you need to go.
Yep.
I also think that if you do go, I told my mom that I wasn't going to go to college unless I got a scholarship, because single parent, had me 14 years old. I don't want to be in debt.
Yeah.
At that age, or have her go into debt.
Right.
But I think that college is a good and bad thing. I think it's the one place where everybody is looking to go somewhere to a destination, but in the same field. Like, we all are trying to make it somewhere.
Right.
So it's a perfect networking tool if you use it the right way.
Correct.
But you say your son is going to college, but you're an entrepreneur.
Yeah.
So how does that conflict with what you have going on?
Absolutely not. Absolutely not. Because so here's the thing, right? You got to have a solid foundation. Okay. So what are the things you learned when you got to college? If you go away to school, right? If you stay at home, it's a little bit different.
Yeah, I went to school out of state.
Right. So what did you learn right when you got there? Because the first thing you realized was your mom's not there no more. So what can you do? Whatever you want. Now the level of responsibility has completely shifted, right? Mm-hmm. Nobody's checking for you. Nobody's asking you cleaned your room yet? Did you eat? You did your laundry? None of that stuff happens anymore. You're on your own. So what kind of life do you want to live as an adult, a pseudo adult, right? Because you're in a bubble when you're in college, right? I went to a 4-year university. I know what that life was like, right? And my son's, he's gonna be a chef. He already is a chef. He's been cooking since he's 7 years old. So he was going, I needed him to go to school to get the accreditation of what it means to be a chef. Yes, anyone can be an at-home chef, but if you're looking to open a restaurant to become a Michelin star rated chef, he has very high aspirations. You got to do all the legwork so that when anyone comes to you, they can't question your pedigree.
Your credentials are there.
Exactly. Right. So that's what I need him to go finish to then go out and live the rest of your life.
That makes sense.
Right? So you got to set it up right.
So now fast forward to where you are now. You talked about life insurance.
Yeah.
Looking at death insurance.
Absolutely.
But what is the benefit of life insurance, and I guess how did you even get into that realm?
Right. Well, let me ask you a question before you even go there, right? Sure. You got insurance on your cell phone?
Do I have insurance on my cell phone? Yes, I do have insurance on my cell phone.
Everybody in this room got insurance on their cell phone?
Yeah, like if it cracks.
You don't?
Yeah.
The man's living right. I like it. I like it.
Like if it cracks, like I can go in. Yeah.
Yeah. What happens if you don't have insurance on your cell phone?
Man, you're gonna have to. Well. I'm from Miami Gardens, so I go to my guy down the street.
Make a call real quick.
But you have to pay more premiums.
Right. So most people have insurance on their cell phone and don't have insurance on themselves. So if you really drop your cell phone on the ground and breaks into 1,000 pieces, you just won't get another cell phone.
Right.
We drop you into 1,000 pieces, there ain't no more you, right? So your life is the second most valuable thing that you have. Time is one, and then you are the second most valuable thing. So the things that you should make sure you do are whatever you can do to protect yourself, you protect yourself, one, and then you invest in yourself. When you get paid, and this was something I learned when I was probably like 21, 22, at YouTube University.
Right. Shout out to YouTube University.
Absolutely. The first thing you do when you get paid is pay who?
You should, Uncle Sam.
No.
You should pay yourself though.
Pay you.
But
Uncle Sam already took his money.
Okay.
If you got a 9-to-5 job, he took his money before you got your money.
We're talking about entrepreneurship, so right. Yeah, I get it.
So the first, no, regular 9-to-5 person.
Okay.
So if you're entrepreneurship, you pay taxes at the end.
Right.
If you're an employed person, you pay taxes in the beginning, right?
It comes out of what you...
Before you get it, they take it out. So when you get your money, the first thing you do is pay you, right? And the reason that is because it creates a habit, right? A habit that is subconsciously embedded in your brain that I got to take care of me first before I take care of everything else. So people have a tendency, and we live in a very credit-heavy society, we live with credit for everything, right? Credit cards for your clothes, credit cards for your house, credit cards for, debt, I should say. Debt for everything, right? And it creates really bad habits, right? I'm not going to get into psychology of what happens when you don't spend physical cash versus a credit or a debit card. It's a whole nother conversation. There's a whole nother conversation. But there's a reason behind it why we're not using cash where we used to use cash, right? It doesn't hurt the same way. When I got to give you my money, it feels different than passing you a card and you give it back to me. I don't lose anything. Like the money might have left my account, but I don't feel it. So the first thing I started doing was investing in myself, knowledge-based, right? I got to learn about where my money should go, how to make it work. And if you're like me, I'm at work, sitting in my cubicle, working every day, 8:30 to 4:30, trying to figure out, like, this cannot be life.
Right.
Like, what else is here outside of this? And then I started to learn that, your dollars are supposed to be working for you, not you working for your dollars. And now how can I make them work? So that's when I started looking at ways to invest in things, right? And I found out that you can use insurance as a vehicle to do investments. And at the beginning, it's a little confusing because life insurance sounds like a bill. But if set up properly, you can use life insurance to live off of. You can use it for your retirement. It can pay you every single month. You can borrow the money and invest it into real estate, into a business, into your business because you want to be an entrepreneur.
Right.
You can invest it in multiple places. But when you learn how money works and how to move money around in a manner that makes it as efficient as possible, it changes your relationship to money.
All right, so let's start at like step one.
Step one.
Because the viewers who are watching this, they may have some questions on,
Yeah.
How to get started. So when somebody wants life insurance,
Yep.
Where do they start? How do they get started?
Well, the first thing they should do is call me.
Okay.
That's the first thing they should do. But first and foremost, I tell everyone, think of different types of insurance, right? You have term insurance and whole life insurance. We're going to talk about whole life for this conversation because it's the most beneficial asset you can purchase in regards to insurance, right?
Okay.
Think of term insurance like car insurance. You sort of got to have it because it covers something, or cell phone service, but when your cell phone coverage, but when it's done, it's done. Like you don't have anything.
Is it
left.
like renting a car, for example? Like you rent a car and after a certain amount of time, you got to return it?
It's gone, right? Well, yeah, it just ends, right? It's like car insurance. Like you pay for it, and while you pay for it, you have it. And then once your term is up, it goes away. You don't have anything to show for it. The money is just gone.
100%.
Right? Whole life insurance is a little bit different. It's like you buying a house. You get to build equity up into your policy. That equity is cash value. That's what you get to borrow against. But let's start from the beginning, right? First thing you want to do is you want to figure out how much can you put aside to save, right? And I'm not saying how much can you put aside to spend, because it's not a bill. This is a place where you're going to save your money. And when you understand that mind shift, that it's not a bill, it's just, I'm just going to save my money instead of the savings account or the checking account, I'm going to save it inside of my life insurance. When you understand that mind shift, that would changes everything, because you're going to save it in this account for whenever. It could be a rainy day, you wait for your car is going to break, you want to save up. If you have small kids, you want to save up for college, you want to save up to buy a house, you want to save up to invest in the stock market, you want to save up for anything. It's just inside of a different account versus the bank, was not giving you any interest. So pretty much look at your budget, and I hope everyone's doing a budget. That's a whole nother thing. People.
I mean, we could talk about. We got some.
All right, man.
We could talk about this. We could talk about it. We got some time.
You got to do a budget. You got to know how much money's coming in, how much money's going out.
Right.
Right. If you don't know where your money is going or what it's doing, you're gonna lose it.
And this is for anybody, really, not just entrepreneurs, but people who have careers, people who are clocking in and clocking out, Absolutely. Just for freelance entrepreneurs.
No, this is for anyone that's alive that wants to get ahead. You gotta know where your money's at. So you first and foremost do a budget. Right, it doesn't have to be super complicated, just easy. How much do I get paid? And then write down all your bills. At that bottom line number, when you do the math, the addition and subtraction, we're talking about very second grade stuff here, right? Addition, subtraction, whatever that bottom line number is, that's how you know if you're in good shape or you're not good shape, right? So if that number is negative, you're spending too much money.
It's like
somewhere.
doing a profit loss.
That's all it is. That's all it is. P&L, right? That's too complicated, right?
It's not. Listen. Nothing is too complicated once you get the information that you need. Once you're exposed to something, it's like you can't unexpose yourself from it. So nothing is complicated. Absolutely. And I get what you're saying, but it's like I feel like we try to dumb things down for our people. Yeah. When no, we should be talking to you and speaking to each other. How these big corporations and these big families and these big banks are talking to themselves. So now we can get the same knowledge. Now we may have a different lingo. Yeah. We may have a different slang. But the type of communication that we should have amongst our people when it comes to this type of stuff, it needs to be, we're not going to dumb it down. We're going to give you everything.
Let's give it. All right. So everybody got to do a personal P&L then, right? You got to see what your income and your expenses are, right? When you figure out those two things, if there's any money at the end of the month, if you have more money at the end of the month and more month at the end of the money, you're in good shape, right? Because you're no longer living off of some type of debt. Figure out, first thing you're going to do on that budget is you're going to figure out how much money you're going to pay yourself. And what you're paying yourself is what you're saving, right? Once you get that number, then you pay everything else. And at the end of the month, you're like, well, I can afford to save more if I want to save more, right? You always want to try and attach a goal to whatever it is. You don't save money just to save money. That's a very bad idea, because you'll become obsessed with just the saving. Your money should be working, which means investing. You got to put the money into something else to make it make more money for you, right? So once you figure out how much money you have, then reach out to someone like me or anyone else who's licensed. And this is really important. Talk to someone who has experience in the thing that you're trying to do. I literally had a conversation today with one of my friends who got a life insurance policy set up with someone else. And he called me, he's like, hey, I want to take out some money, because everybody knows what I talk about now. They're like, yo, I want to borrow money from my policy and go buy an investment property. He's looking to buy an apartment building. He called the insurance company. The insurance company's like, you don't have any money in your policy. And he's like, why not? I've been doing this thing for like 5 years. So when he called me, I asked him 2 questions. He's like, how'd you know? Right? I asked him what type. I told him what kind of policy he had.
I need to know these questions. We need to know these questions.
So when he told me he had a policy for X number of years and he had no cash in there, I'm like, first thing I asked him was it a whole life policy? He's like, yes. Second thing I asked him was, is it an IUL? He's like, yeah, how'd you know? Because if an IUL is not set up properly, it doesn't grow properly.
So what is an IUL?
An IUL is an indexed universal life. So it's a type of whole life policy. So think of whole life as like an umbrella, and one of the little sprockets off the umbrella is IUL, another one's regular whole life, another one's VUL, variable universal life. It's just a different form of a whole life policy. IULs are really, really popular right now online. Like everybody's talking about get an IUL. It grows. There's no bad side. There's no downside, because it has some features in it where you can get 10 to 12, 15% interest upside and then 0% on the downside. You won't lose money with it.
So what is an IUL?
Okay, so an IUL is a different type of an insurance policy, right? So think of a whole life policy as the umbrella,
right?
And then the IUL is one of the little sprockets that come off the umbrella. So you got IULs, you got VULs. So IUL is indexed universal life, VUL is variable universal life. You got a regular whole life is still on one of the little sprockets. So they have multiple types of whole life insurance policies, so just variations of them. They're like Jordans, right? You got the 4s, you got the 11s, you got the 13s, but then you got different colorways in each of those actual sneakers, right? I'm gonna stick you guys. That's why I use Jordans in my analogy. But that's how they work, right? It's the same type of thing with just financial products, right?
Right.
The game didn't change. They're just talking about something a little different. So with the IUL, that's what my friend had. When he said he'd been put money into it. If they're not set up properly, they don't grow properly, right? So you're expecting it to do 10, 12, 15%. And if it doesn't do that in 4, 5, 6, 10 years, you're 10 years down the line. And what's the one thing we can't get back? Time. So once you lose all that time, you can't go back and undo it now. So if the money's not there, you're jammed up, you can't do what you want to do, and now you're scrambling trying to figure out, well, how do I make up the time for the money that I lost? And it's almost impossible, right? So it's really important to get with an agent that knows what they're doing. They're honest, right? They got to tell you, I either know or I don't know what it is you asked me to do. And if they're that honest, they'll hopefully point you in the right direction. But you want to find an agent who's familiar with setting up a infinite banking policy is another term that they use for it. And then infinite banking policy is a policy where you put money into a policy and it allows you to borrow money from it. And it creates an infinite bank loop, right? So you know that the symbol for infinity is that sideways 8. When you use a policy properly, you can put money into it and then borrow from it and then invest it somewhere else or spend it. And then you put money back into it and then you can borrow from it again. So then it goes.
So when you borrow money from this
Policy,
do you have to, let's say you borrow a certain amount, whatever that amount is, are you still making money? 2 questions. Are you still making money from the initial investment that you made, the cash value, I'm assuming? Or do you, and then also, so do you make money still when you pull money out? And then let's say something happens where you take the money and the money goes poof somehow. You're not able to pay it back. What happens?
Right, you asking all the right questions right now.
I'm just asking. So I'm just here to learn too. I'm here to learn, and I think the questions that I have, people have too. So.
Absolutely. So first, to answer the first question, right?
It's all about securing our future, baby.
And this is a great place to put it, right? You want to talk about asset protection, right? So first and foremost, an insurance policy is an insurance contract.
Okay.
All right. So contract means both parties have agreed to do X, Y, and Z. And you got to uphold each of those things. If you have an insurance policy and you put the money, the first question was, what happens when you put the money into it? And do you make money on it when you take the money out?
Yeah. Do you make money on the initial when you borrow
against it? Okay. So the answer to that question is yes. Okay. And here's how it works. Let's just say we're going to use just random numbers, right? Let's say there's $10,000 in cash value in your policy that you built up over time, right? Mm-hmm. Any amount of time. And I need to borrow $8,000 to go put it into an investment, right? I want to buy some new equipment, right? Mm-hmm. When you borrow the money, you're not doing a withdrawal. So when you go to the bank, a regular bank, right? You got $10,000 in your savings account. You take out $8,000. The bank no longer gives you interest on that $8,000 because you took it out.
Right.
When you borrow money from your policy, they're loaning you money from the insurance company, not from your money. They're giving you a loan and using your money as collateral. So the money that's in your account is still in your account. So the interest that you're getting on your money is still there, like you didn't take anything out because it never left the account.
Right.
So you continue to gain the interest. Now let's say you put the $8,000 to your equipment, and then the equipment breaks. You shut down the business. You're no longer doing this. You need to put the money back into your policy, but you can't because you're not making the money right now.
Right.
When you borrow money from your insurance policy, you do not have a monthly payment. It does not affect your credit. It does not show up anywhere. So the only people that know that you borrowed the money is you and the insurance company. Nobody's looking for it.
That means that we need to only tell our secrets to the insurance companies. Because listen, man, social media is crazy out here. No, I'm just kidding.
Yeah, yes.
But that's awesome. So it's like you said, it's like a infinity loop.
Yes. So just so you know, when you borrow the money from the insurance policy, you don't pay it back. At some point in time, you're gonna pass away, right? There's two things guaranteed in this country, right? In this world, death and taxes, right?
Unless
you know how to get around one of the two.
That's a whole other conversation.
Right. So if you don't pay it back, your beneficiary will eventually end up paying for it from your death benefit. The insurance company just deducts whatever your loan amount is from the amount they're supposed to give out to your beneficiary.
So let me ask you this question. So is there a certain amount that you have to start with, or is there a limit that you can put in? Because if somebody, like athletes, for example, they're making millions of dollars. Yep. And if I was an athlete, I would have life insurance for myself. But let's say somebody wants to put 20 million in a life insurance policy and live off the, 4, 6, 10%, whatever that is.
The interest.
Can you put 20 million, or does it have to be, like, how does that even?
Okay, short answer is yes.
So you can?
Yeah, so.
That much, bro?
Yeah. Listen, here's the rules for life insurance. If you can show me that you can afford it, you can have it. That's it. So, I mean, there's a lot of people that use it for benefits. You know who Jim Harbaugh is, the coach, NFL coach?
Yeah, who just won the college football national championship. Michigan.
Yeah.
He just signed with the Chargers.
Yeah. So when he first started at, I think it was at Michigan, he got a huge salary for Michigan, right? He asked Michigan to put 90% of that salary into life insurance.
No way.
That's how they pay him. So what happens when you do something like that? The money goes in, he can't touch it the first day, he's got to wait 30 days, right?
Okay.
But once he takes the money out, he's not paying taxes on that money. The school paid taxes on the money when they put the money into the policy because they didn't give it to him. They put it straight into the policy. So when they put it into policy, he's borrowing from that policy.
Right.
But Jim Harbaugh's his salary was millions of dollars per year. I think it was like $7 million a year they were putting into the policy. That's a lot of money. Right? Now imagine borrowing that money for a coach, right? And back then, there's no NILs for the kids back then, right?
Right.
Only the coaches were really making money and the school. But that type of sophistication to get paid through an insurance policy, so that now that when you borrow the money, you're not paying any tax on it.
So let's say it was 10 million, just to make the numbers right. Yeah. 10 million, 90% of it. So it's 9 million is in this life insurance policy.
Going in every year.
Every year. So let's just say for the first year. Let's say, so he can put,
he can borrow up to about 80 to 90%. 90%. Let's just say 90%.
So out of the 9 million, he could probably take like 7.8, 7.5.
Tax free.
And then he's still making, so he borrowed that money, then he's still going to be making whatever the market does, a 4 or 6%.
Let's just say on average, let's say 5%, just bare minimum.
Bro, what is 5% of 9 million? 10% of 9 million is 900,000
a year. So technically, he could only withdraw, if he wanted to, just withdraw the interest.
And so let me ask you this question. So now when you're making money, when he's making money off of this, is interest off of this money that he put into the policy, is that taxed?
No.
Because is interest always taxed?
Anything inside of a life insurance policy, if it's borrowed, it's coming out tax-free. If it passes from the person who set up the policy to the beneficiary, it passes tax-free. So there is no tax. You avoid the tax system once you get your money into a whole life policy.
So should not everybody have multiple life insurance policies and only spend money on life insurance policies?
If you're alive, you need to have life insurance, period. Now, what level and how much you have is based on your income.
Right.
But if you can afford it, you absolutely need to give me a call and I will show you how the game works.
And then now, this is good.
When the more you understand it, the more you want to get into it.
This is good talk. This is good talk.
Yeah.
And so now, what happens because I know back in the day when like families wanted to have banks, they were, your family, Andre, my family, Amar, we're going to put our family's wealth together. Boom, now we have a family bank, family vault, whatever that is. Life insurance is does life insurance now play a big part in like building like wealth for your family, like legacy-wise?
100%. So I'm not sure if you've ever heard of the Rockefellers.
Oh, yeah.
Right? So the Rockefellers are no, not the Rock. Not the Rock. We're talking about the Rockefellers from back in the early 1900s, right?
Right.
So they are the ones that are credited with creating this infinite banking system, right? That's what it's called, infinite banking, right? There was the Rockefellers, it was the Vanderbilts, and there was another family, the Rothschilds. Those were the 3 richest families at one point in time in the world. The Rockefellers created a system where they used family trust and life insurance to create and preserve the family wealth. There was rules that they had to follow to be able to spend money, reinvest money, and buy life insurance. To this day, I think they're more than 10 generations in, they still have money. The Vanderbilts went broke. The Rothschilds lost a whole bunch of wealth. The Rockefellers still have money because of they use these policies in a very effective way. That's just what it is. The math is math. It's math, not magic. The money makes sense when you start using it in the proper vehicles. So yes, everyone should have it. How much is based on how much you have.
Now, what if you're somebody who is younger, or even somebody that's a little bit older? Are there benefits of having life insurance policies when you're older or younger?
Well, the younger you are, the cheaper it is. Your life insurance is actually cheaper because the likelihood of something happening to you at 20, 21, 25, it's much less than someone who's 70, 65, right? we're in reality is we're at the tail end of our lives at that point, right? So we're expecting that those people, they're not going to be around forever. So the older you are, the more expensive it is, right? So if the younger you are, when you get it, it gives you more room to save more money, right? It's not a bill. It's not an expense. You're saving money in a vehicle that will become very important to you down the road. When you're 25, you don't really care what you're doing with your money, right? Like, you're not looking to buy a house. You might want to go get a car. But outside of that, there's no really big expenses. But you fast forward 10 years, I'm 35. Maybe I got married. Maybe I have a kid. I'm 45. Maybe I got multiple kids. I'm 55. I'm looking to retire soon. But if I've been saving money since I was 25 years old in an account that's protected, right? You can't, in most states, you cannot get sued and lose your life insurance because it's protected by the contracts and how the IRS set it up. So that money is growing there for you, secure. You can borrow from it if you need to. If some random event happened, right? COVID. How many people do we know that passed away that were in their 20s and their 30s, right?
A lot of people.
It was unexpected.
Right.
But if those people were planning for the future, they would have had a policy in place and their families now not scrambling, trying to figure out, well, what are we going to do? How are we going to pay for these things? You know, we got to figure out our life in a state of grief and tragedy. It sounds a little, you know, far-fetched, but it happens, right? So yeah, the younger it is, the better it is because it just gives you more room to make more money. Sort of like the stock market. The longer you're in it, the more wealth you have. Insurance works the same way.
So is it more of like a behavioral thing more than a knowledge thing? Because I feel like we kind of know what life insurance is. Is there, especially with our culture, you know, we love entertainment. We love, you know, we love entertainment.
Right.
You know, our culture. We're very, you know, music driven, sound driven, you know, the entertainment driven. You know, how else would I say? You know, we're very look good instead of be good and feel good.
Right.
And I'm a victim to that as well.
Yeah, we all are. We all
especially
are.
at one point in my life.
Yeah.
You know, how do you think we highlight the stuff that you're talking about and then it supersedes the stuff that we know, we look on Instagram and TikTok and social media every day that we kind of glorify?
Yeah, so, I mean.
So my question is it more of a behavioral thing or do you think it's more of a knowledge?
Knowledge. I think this is the truth. It's not sexy, right? Saving money is not sexy. Saving's not sexy. It's not a sexy thing. But if you can have both, right? If you have the knowledge, right, that if I save the money now, you're going to sit down on the sidelines for a little while. But then I can live however I want to live. If I want to live like a rapper or an athlete or a superstar or whoever, a movie star, right? The money's there when you wait a little bit, delayed gratification. Wait a little bit of time and you get to do whatever you want to do for the rest of your life. I think most people would do it, right? So the knowledge and the behavior, they sort of go together. They're not separate. You need to know what you're delaying it for. And then once you understand how the money works, I see the wheels spinning in your head right now. Once you understand how the money is going to work for you, you'll wait a little bit longer to know that I can go do whatever I want in maybe a year or two, right? It's not a long period of time, right? We go to college for 4 years, and that goes by like that.
It's like delayed
gratification is all it is.
My coach used to always talk about that. Yeah. Stop worrying about instant gratification. You're a freshman. You know, you're in 10th grade. You know, it's going to come.
Put your time in. Put your work in.
So
it'll get there.
So for anybody, you know, for everybody that's watching this or for anybody who runs across this, for our community, you know, what would you say to them when it comes to, you know, putting this at the forefront and you know, talking about the delayed gratification and I guess like kind of sacrifice? Because I think what you were talking about today has a lot to do with like sacrificing yourself or like your immediate, you know, gratification like we talked about for not even your delayed gratification, but for the people who don't even know you exist yet because they're not alive
yet.
You know, how important do you think that is, or do you think that is important at all? Do you think people should focus on, you know, themselves, or do you think that people should focus on legacy? Or
I think that people should look at their finances the same way that they tell you to look at yourself when you're on an airplane, right? What does that mean? When you get on a plane, for taking a flight, you've heard this little speech before. They say that in an emergency, airbags will drop from the ceiling.
Right.
And what's the first thing you're supposed to do with your mask?
Take care of yourself.
Put it on your face first, and then put it on your child or whoever's next to you second. And the reason for that is if you don't put it on your face first, you're not getting the air you need to be prepared to take care of anybody else. So you have to take care of yourself first, right? It's not a selfish thing. The reason why people our community doesn't really go to life insurance first is because, one, the mindset is, why would I leave a bunch of money for someone else? And if you don't have a kid, that I totally understand the statement. But if I'm telling you that you can save the money for yourself, that should change your perspective on why you have the policy.
Right.
Right? Now it's for you. The benefit, the extra sauce on top is that you can leave it for somebody else too. But you get to use it while you're here. Because it's for your life. It's life insurance, not death insurance. Right? So I think that, you know, the mindset should be, let me set it up for me. And if I don't get to use all of it, I can't have all the fun, then I'll pass it on to somebody else.
That's what's up. So I guess to wrap it up, you know, one, I want to say thank you for, you know, sharing your story, you know, sharing your testimony, you know, sharing a lot of knowledge, you know, when it comes to what you do, your profession.
Yeah.
And I like to ask this question to finish off, you know, because this is the Secure Your Future Network. First of all, thank you for everything. Thank you for, you know, sharing, you know, your story, your testimony with us, you know, with our community. Looking forward to, you know, connecting, collaborating, community with you for sure.
Absolutely.
What is Secure Your Future? When you hear the word Secure Your Future, the phrase Secure Your Future, what does that necessarily mean to you?
I think it's a great phrase, first and foremost, right? And the first thing that comes to mind is tighten up, right? Make a plan today to live the life you want to live tomorrow. That's the first thing I think about, right? I'm a money guy, right? So first and foremost, when it says secure future, I gotta get the bag. I need to get a hold of it right now,
Right.
so I got something for later. But I think that it has a lot of different parallels, and it goes a lot deeper than that, right? Because secure your future is not only about one vertical, right? It's not just about your money. It can be about your spirituality. It can be about your faith. It can be about your health. It can be about your family. It can be about your money. So secure your future is, you know, you need to take an inventory of who you are and where you want to be, and figure out a plan and a path to get there.
There you go. So appreciate you, brother.
Thank you.
Great conversation.
Appreciate it.
Listen, this is Secure Your Future. I don't know what episode this is, but shout out to my man Andre, crushing it. And, you know, we're happy that you're watching this, and, you know, we're here to just document the process. And I just want to say that, you know, we're not only filming these episodes or these conversations just to interview you and just to hear your story, but also to document the process, because I think anybody can do this. You know, I think anybody can, you know, go and take a cell phone or a camera or go on Zoom and, you know, talk to people that they're interacting with to help, you know, get their story out. Because I do believe in building your audience, and I do believe that everybody should feel empowered to tell their story, not for you, but because you decide to tell your story. There's somebody out there that is maybe not even unwilling, but unable to share their story, and they need some hope out there.
Absolutely.
And so that's what this is all about. So thank you, bro.
Thank you, man.
Appreciate you.
Appreciate it.